Those of you who have been watching the weekly market update videos for Portland Metro Real Estate know that often what we're doing is we're taking our current stats, our weekly stats in some cases, or our monthly stats, and comparing them to the week before, maybe the month before, or maybe a year-over-year comparison the same month a year ago. But what that doesn't give you a lot of times is a little bit of context for what those numbers actually mean. Comparing to last year wasn't a great year for real estate. You know, we had high interest rates, higher than we have right now. A couple years before that, even less context. Those were the unicorn years. That was the strongest seller's advantage market with an absolute frenzy in real estate, and they're not indicative of a normal Portland market. So comparing what we have today to then also doesn't make a lot of sense. So one of the videos that I used to do in the past is take all of the market stats and plot them out in a graph, in a chart, over the last 15 or so years so that we can look at where we've been historically and where we are right now and provide a little bit of context. So let's do that right now and take a look at the numbers. So let's start with some supply numbers, and that would be the number of new listings to hit the market. We're looking, of course, at September, and each one of these plots on this graph here are for the month of September going back to about 2007. So what you can see right here is that what we've been seeing recently is that the number of new listings has been trending down compared to last year at this time. 2585 to 2713, not a big difference, but still trending in that direction. 2021 and 22, those are, those oddball years. We did have a lot of new listings hit the market and they got snapped up immediately. But look here, what we have going from about 2015, 16, 17, 18, 19, these are the closest that we get to more normal years. And we were looking at the numbers of listings hitting the market in the 3,600s, so considerably more than we have right now. That says to me that our supply is still tight historically. So the closest numbers that we have to what we have right now are 2011, 2012, 2013, and those were the bottom of the market. I remember 2011 in December, it was the first time in years that I had seen cash transactions in our real estate market, and we started to see a lot of that with buyers getting really motivated and snapping up the properties that were available. Now, just looking at the total number of active listings, we do have a bit more than we had last year at this time. In our sample that we have, which is for a different selection of the metro area than what we have from the RMLS, which is the source of these numbers. We're trending at about 23% more listings this year than last year at this time. You can see that last year at this time, not a lot of listings. Total active listings, 1809. Now we're at 2076, and we know that delta between last year and this year is decreasing. That's a new trend that we've been watching recently. But look at what we have for active listings. The closest that we come to the number of active listings again is here at the kind of the bottom of the market, 2011, 2012, 2013. 2058, that's about where we are right now. And then what we consider, more healthy markets, kind of that 16, 17, 18, 19, still have more supply than we had, but we also had higher buyer demand. So the numbers that we do have are still pretty low as far as the supply goes. So inventory in months is a measure of both supply and demand. And the easiest way to think about that is, given no new listings, at the current rate of sales, how long would it take to sell everything that's currently on the active market? So every listing on the market, every home that's for sale on the market at our current rate of sales, how long would it take to sell those given no new listings? So here we are at 3.5 months of inventory. It used to be kind of the old wisdom was that 6 months of inventory was neither a buyer's advantage nor a seller's advantage market. I have been hearing analysts kind of move that number down. I've been hearing 4 months of inventory is more of that tipping point between a buyer's and a seller's advantage market. So here we have 3.5 months of inventory. That is supposed to be a seller's advantage market, but it doesn't always feel like it. Looking back, where have we had inventory that's similar to what we have right now? That's 2013. Inventory in months was on its way down. until we kind of hit the bottom, of course, back in those frenzy years in 2020 and 2021, where a lot of times we're hitting sub 1 month of inventory. So the number that we have isn't terrible. It's equal to markets where things were taking off, but what we do know is that inventory in months is on the rise right now. But with our current interest rates, our current buyer demand, the buyer demand that we've been seeing over the last 4 to 6 weeks, and our current supply of homes with a suppressed number of homes hitting the market, I suspect that we're going to see this start to trend in the other direction. We just have to wait and see. Total volume of closed sales, we do know that the volume that we've had of transactions this year and last year has been very, very low. We have to go back to about 2011, 2012 to find numbers that are similar to this. Again, the number of closed sales at that time was on the rise, and right now we're pretty flat. However, once again, we have seen increased buyer demand, 25-30% more than we were seeing last year at this time. So again, I suspect that we're going to see the volume start to pick back up, at least compared to last year at this time. So where are we right now for appreciation? Right now we're at 3.6% appreciation versus last year. Last year was not great. Last year was down, and that's after coming off of those a couple of frenzy years. Where, looking at 2021, we had 16% appreciation. Looking back through the years, where are we at right now? Well, we haven't really had a market similar to what we have right now, at least not since 2013. Appreciation has been pretty strong throughout the years. The only year where we had a little bit of a dip was in 2019. That was a market that was starting to slow down. But again, what are we looking at right now? We have lower interest rates. Demand is starting to pick up, and supply isn't picking up along with the demand, at least not yet. Well, that's what I have for you today. Thank you so much for tuning in. I do appreciate it. And if you have any thoughts or questions, feel free to reach out to me. I'm always happy to share what I know, and I'm always happy to do a bit of research. All right, we'll see you next week.